Bitcoin has been at it again, recently tapping back into that $68,000 level early this morning. And in today's video, we're going to be taking a look at the technical analysis on Bitcoin, where I'll be sharing my short to medium time price expectations for BTC. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe, and let's take a look at what's going on with Bitcoin. Okay, guys, so here we have Bitcoin paired up with USDT. We are on the 1 hour Binance chart here. Okay, so as we were kind of looking at this, we were talking about the potential for another push a little bit higher. Yesterday, we did see this at 1100 hours UTC. Sorry, on Wednesday, we saw this 1100 hours UTC with that move at 68,424. Okay, so it's been a couple of days since I've done a Bitcoin specific video, but I did cover a lot of what was going on with Bitcoin in yesterday's data or yesterday's video, which was more around XRP and what's going on there, but referencing Bitcoin in that discussion. Now, as we can see, we had a bit of a move to the downside, okay, coming in yesterday at 1400 hours on a swing low at the $66,666 flat. If there's anyone who's into the superstitious kind of stuff, that's 66666 on Binance. It is what it is. So since then, we have had a bit of a run to the upside. And obviously, we saw in the early hours this morning at 0100 hours UTC, a move at 68,260. From there, we have moved back a little bit, but I don't think we are done just yet. Now, obviously, let's address the elephant in the room. In the previous kind of video, we're talking about the short position here. And you can see that this is exactly kind of what we've been looking at. We've been seeing a bit of a move to the downside. There was obviously support being found in and around the 50 EMA, 50 SMA on the 1 hour time frame here, but there was a 2.57% with a bit of leverage. That could have been some good profit. I still suspect that we have further to the downside to go, even though there's a lot of hype, lots of positivity for Bitcoin to look to continued up into maybe new all-time highs. There's lots of perma bulls out there that essentially are just telling you what's going to get them the clicks on their videos or get their posts seen by as many people as possible, which is all bullish. But for the most part, the structures that we see here are ending structures, not kind of, the beginning of a bigger run. There are, of course, some caveats to that. On the bigger kind of macro levels, Bitcoin could go either way, but on the smaller timeframes, we are looking for a bit of a correction, in my opinion. So taking a look at our momentum here, we can see that we have got some downward momentum on the stochastic RSI on the 1 hour timeframe, right? You can see that coming in right now here. Okay, so we are looking for that. On the 4 hour timeframe, I believe we are looking for upward potential, but there's no guarantee that this remains out of the oversold area. Historically, we have seen little bounces to the upside, only to get dragged right the way back down. On the 8 hour time frame, we're overbought. On the 12 hour, I imagine that we are in that range. If it will load, yeah, up in the overbought area, including the daily, of course, we're up in the overbought as well. So we know that there's going to be a big shift in the momentum for Bitcoin. We are going to be looking for Bitcoin to move on down. Although the structure at the moment still indicates another potential push back towards $68,000, maybe that's going to be another area for us to kind of focus in on layering in some additional shorts if we wanted to. Taking a look at this, we can see that this was the previous area where we were finding resistance. Okay, so basically 67,952 to 68,424. Now, there were no closed positions here until we got to the candle that was at 0100 hours today. We actually closed for the first time in this gap most recently on this 1 hour time frame. We did get rejected, of course, from here, and we have moved back towards the 50 EMA or 50 SMA, sorry. So from here, we can, of course, see the potential for this to move up one more time, tapping back into this range, and then maybe starting to see that decline. Ultimately, the short idea on the 1 hour time frame is to put that stop loss well above $70,500. The reason for that is it's going to be a new daily high if we were to breach that level. So for the most part, momentum on the stochastic is not, in my opinion, supporting that move. But it's not just the stochastic RSI momentum-wise we need to kind of keep an eye on. We do have the relative strength index, which is actually in bullish territory as it is above the 50 level and is potentially approaching towards the overbought. So from a momentum point of view, that's a long-term kind of trend perspective, outside of the stochastic RSI. Stochastic RSI is very sensitive to price movements, so it will show you all the knee-jerk reactions, whereas the relative strength index is not as sensitive, so it will show you kind of a more gradual kind of approach to the market. Now, obviously, being above 50 typically does mean that we are in bullish times. However, the nature of what's going on here is a little bit alarming. We haven't had a clean break of this area, in my opinion. We've actually had some interesting kind of stuff going on. So we'll keep a close eye on that. There's no major divergences here. At least not on the indicator kind of front. If we were to go up into a higher high here, okay, higher, in fact, we have got some divergences here that's just not being flagged up. And we can see that with this higher high that was set here, we can see that actually our momentum has dropped. So we could argue that should have been flagged as a bearish divergence there as well, which would have actually been a good indication for this level. So again, you can't trust these indicators 100%. That one should have been flagging that up. And we obviously did see that move afterwards. From there, though, we can see that actually it's not too bad. And if we do see a higher high on the relative strength index and a lower high here, that would actually be bullish divergence and would signal that next move to the upside. So we want to kind of keep those things in mind. Now, if we turn that off and bring in the MACD histogram, the MACD histogram is another way of just showing you guys what the momentum is like. Okay, so from this kind of point of view, we can spot divergences against the price action. So for example, we have higher highs going on here, okay, coming up in to these moves, and at the same time as that is happening, we have lower highs on the histogram. Okay, so this indicates to us that although there might be another push, we are looking for a bearish move to the downside. And if we have another higher high here, we also have a lower histogram. Again, we're looking for those bearish divergences that are indicating that this move is not supported by significant demand. Okay, we can also use the volume for this, but it's just not as clear unless you're really into looking at it. So from here, you can see again, you have the higher highs in price, but at the same time as that is happening, you have lower highs in volume. So against all of these stochastic RSI, the relative strength index, the MACD histogram, and the volume profiles are telling you the same thing. Essentially, we are moving up in price, but there is less volume involved in each of those moves, indicating that a reversal is coming. Now, we can't time that using these tools, but it gives you an idea that there isn't a lot of strength in these moves. We might have a few inflows onto the ETFs that might help drive things, but ultimately we are going to be reaching a local top soon. At least that is what the data is suggesting to me at the moment. Okay, so we want to keep these things in mind. Okay, nothing set in stone there. Now, when we take a look at this from an Elliott wave theory point of view, where we can be a little bit more predictive, right? Elliott wave theory is a predictive tool. Okay, so here we can see an interesting run to the upside. Now, why do I say and use the word interesting? I use the word interesting because we have a really shallow area just here with this correction. We then rally up, and we also have another sideways trade here. Now, we rallied up higher than 1.236, okay, and therefore we are to expect, in my opinion, another push to the upside. Now, when we take a look at our structure here, what does it actually tell me? Well, it looks to me like we're going to be looking for a triple zigzag pattern, meaning that we're going to be looking for another push up, but I'm not expecting terribly too much. Now, it's possible, of course, that we do see a really significant run. Maybe we see $71,500, for example. I just don't think that's the most probable. So from an Elliott wave theory point of view, we can see that we have the idea of a W, X, Y, X, and Z pattern, and we look for that Z wave pattern there. Okay, now looking at the internal workings of that, we could see potentially 70,390. Okay, again, I don't think we're going to go as far as that, but again, we can't be really predictive at this stage as to where that potentially could go. But taking a look at it on the real kind of small scale here, I would say that actually we're probably not even going to get close 70, probably more towards 69, and then from there I think we complete the Z wave. Okay, so not only do we have, you know, the stochastic RSI telling us that there's still some potential here for a little bit of a push to the upside, specifically on that 4-hour time frame, and we see a lot more volatility on the smaller time frames. We see the momentum basically being kind of running out, right? We can see that the buyers are getting exhausted. There's not a lot of demand coming in. The histogram shows it, the stochastic RSI shows shows it, the volume profiles show it, and ultimately the Elliott-Wave theory structure also shows that we are looking to kind of push to these upside a little bit more, and then that is kind of it. Now, if we kind of take all of that into consideration and throw on a VPVR, it shows you where the volume profiles are. Okay, and the volume profiles are depending on how many candles you're looking at, and this is on 1 hour time frame. If I zoom out, it will adjust according to where our orange lines are on the chart. So here you can see why we kind of have a bit of a problem. There's not a lot of volume up in this higher range, okay, and you can see that there's actually a lot more volume down here in that $63,000 range. Why is this important? This is important because basically, as you can see, there's not a huge, or hasn't historically been a lot of volume in these areas, but you can see where there's likely to see a significant buying pressure come back in. Okay, so if there was a lot of sell pressure here and a price pushed up higher, price coming back down to where the sellers were selling, they might turn into buying volume because they feel that they maybe made a mistake. Okay, there's a little bit of psychology that comes into it. And also right down here, there's a lot of buying demand. As price comes back down, a lot of people might start thinking, okay, the prices are going to be significantly dropping. They might sell their positions in case it goes into negative numbers. Likewise, some people might be looking to dollar cost average and build those positions even more. Okay, so the importance of understanding where historical volume sits is also very, very important. So seeing that there's not a lot of demand coming in, as in we can see diminishing volume profiles, we can also see historically there's not a lot of volume up in this area either. We can also see that the histograms are showing weakness. We can see that the stochastic RSI is showing weakness. The relative strength index, although is above 50, doesn't necessarily mean that it's going to stay there. So for the most part, looking at all of these things and kind of piecing all these pieces together with Elliott-Wave theory as well, we can say that this move to the upside is probably going to be looking to finish off soon, and we can start talking about those next moves to the downside, which is why, of course, we are in this short position. The short position is the one that we think is likely to hold. Hopefully the stop loss is in a good position. We can obviously adjust that if we needed to, but it does to me look like there's a short position here for Bitcoin on the 1 hour time frame. And talking about trading, Blowfin are killing it with their promotional activity at the minute. If you're new to Blowfin, this is your chance to grab a slice of a massive 60,000 USDT prize pool. Yes, Blowfin is rolling out an awesome promotion where new users can earn their share of 60,000 USDT just for signing up, predicting Champion League results, and trading on their platform. Blowfin, one of the rising crypto exchanges, is giving new users the opportunity to win big. How? By signing up and participating in trading. You can get your share of 60,000 USDT. Whether you're a seasoned trader or new to the game, Blowfin is making it rewarding for everyone to jump in. Here's how you can participate. Step 1. Sign up on Blowfin using the referral link in the description. Step 2. Start trading on the platform, where your trades will count towards the tickets and points for the prize pool. Step 3. By being an active trader, you'll be eligible for more tickets, points, and your share of 60,000 USDT rewards. This is an exclusive promotion offered by Blowfin. For all the terms and conditions, click the link in the description. This promotion, of course, is not affiliated with YouTube or Cheeky Crypto in any way, but is a fantastic promotion offered by Blowfin. So what are you waiting for? This is a limited time offer, and you definitely don't want to miss out on your chance to grab some USDT. Hit that link in the description, sign up to Blowfin, start trading, and get in on your chance to win big. Don't miss out on this incredible opportunity with Blowfin. Sign up, trade, and claim your share of that 60,000 USDT prize pool. Good luck and happy trading. Okay, so let's go ahead and roll this up into a daily time frame, right? Because the daily time frame shows you the bigger macro picture. Okay, so we are still in lower highs on the daily time frame, right? I know some people look at this maybe from a more zoomed in lens where they can see this overlapping structure here with higher highs occurring. And I do want to kind of urge everyone that higher highs and higher lows, in the same way that we have lower highs and lower lows with overlapping structures, are reversal patterns. Okay, so this in itself is a bit of an alarming one. We have a bit of an ascending wedge pattern. We can see it kind of tilting in a little bit. And what leads into this is this other move coming to the downside. So from like a big bearish, I guess, concern would be that you have some kind of really big correction going on here. Now, taking a look at this through a kind of Elliott-Wave theory lens, we end up in a slightly different position. position, okay, because this can be multiple different things. But a lot of people will kind of say, okay, well, are we in some kind of megaphone pattern? And some people might say, it's a B C D E kind of situation, but that doesn't really fit. I mean, it can, but it's not the most ideal kind of situation. So when I take a look at this, okay, I break it down into the kind of subsections of what we've kind of got going on. We have a very corrective pattern here. Okay, so this corrective pattern is still inside its Y wave, where we can see this potentially peaking up. Now, the previous wick high that is of importance, but it's not the main kind of go-to one, but it is of importance, is 70,079.99. Okay, that was the wick high that we had on the 29th of July. This is an important one because that is kind of our anchor point for a kind of downward trend, right? It was a lower high across these previous months. If we can break that, if the bulls can break that, then that is going to put a little bit more pressure on those bears, okay, who are looking to kind of try to take the price to the downside. Now, with everything that's going on here, we have to kind of consider that maybe there is another push to the downside. I've kind of been through this a few times. I'm not looking for major corrections either. Some people are calling for $40,000, for example. I'm kind of looking at this through the lens of, okay, there's another move potentially to the downside, and I do suspect that we are likely to be testing out the previous low around 49,000. So we're talking like 50K. Now, it's possible that we go down a little bit lower, which actually would be probably the best thing to do, to be brutally honest, in the regards of it will set you up much better for the next run to the upside. But it does not essential. And essentially, all we really need to do is come down and test out some of these previous lows where the volume sits. If we bring that VPVR back on again, you can see where the volume is sitting and where it is not sitting. If I zoom out far enough here, you'll get a good profile of what's going on when it comes to the volume all the way from November 2022. You can see that a lot of the volume sits down here at 24,000 to 32,000. Outside of that, there really isn't a lot of volume. Of course, you can zoom in and it will change and it will give you different perspectives based on what you can see here. You can see that there's a lot of volume if you zoom in within this range at the higher end, but there is actually more volume still sat down here in this lower consolidation range, which does come in between 40 and $45,000. There's more activity, or historically has been more activity down there, but it doesn't negate the idea that actually a lot of the volume sits elsewhere. Specifically, the further that you zoom out, you can see where the profiles sit and why we are seeing such a kind of strange market at the moment, considering the fact that this area where we kind of find ourselves consolidating in at the moment has a reasonable amount of activity, but is significantly lower activity or lower volumes than we have seen historically elsewhere. So knowing that we are in this kind of interesting pocket, as we push up higher, the volumes historically have become weaker. That's kind of what we're seeing. That's what we see within the histograms, the stochastics and so forth. You can see it depicted here on the VPVR as well. Okay, now this ascending wedge, obviously ascending wedges are bearish, so we want to be thinking that there's a resistance here that is likely to kind of suppress the price action. Now, from our stochastic RSI, that momentum is of course in a bearish position as well. No guarantees with stochastic RSIs in the same way that we've relative strength indexes. They don't give you kind of the idea that things are going to be, immediately going to the downside, for example. Here on the relative strength index, you can see that we're coming right up to the previous areas where we have been rejected. So we take a look here, we can see that in May of 2024, this was a rejection point. Over that, we retested in July of 2024, was rejected. As we kind of pushed up in August, got rejected, pushed up again in September, got rejected, and we are right up in those higher ranges once again. So the relative strength index, if history repeats itself, is going to be an indication that there's a little more bearishness to come here for BTC. Bring in the histogram, and we can see here as well, we have higher highs in the price action here within this ascending wedge. And of course, whilst that is going on, what do we see? We see the histogram getting weaker over time. Okay, so you can see it right inside here. So this kind of divergence, it shows us that there is weakness, not only in the moves to the upside, but also the moves to the downside, right? We have to be fair about this. We can also see that there is a divergence coming in down here on the low side. So actually have a triangular wedge, and we are at a critical point for Bitcoin to see a break. Okay, the ascending wedge pattern, right, is typically a bearish one. Okay, so we can't make any guarantees because the markets are unpredictable to a degree. Okay, so we can't make any guarantees about anything, but Bitcoin is at a pivotal moment where it's about to make a major decision, or at least the traders are about to make a major decision. And I personally think we're going to get rejected because a lot of people are hopeful and a lot of people are bullish at the moment. The sentiment is very much greedy in the market. I think there's a lot of people are hoping that we go to new all-time highs, and I think the market will do the opposite. I think they'll go after the money, they'll go after the liquidity, and based on the VPVR volumes, those are lower. So the liquidity sits lower, not higher. We can, of course, use smart money concepts to help with that as well. There's a fair value gap set at 63,000 to 65,000. Again, that's a main pocket for the VPVR, which if I bring that on the chart, you can see right inside here, the fair value gap is right where the volume profile is as well. So again, it to me looks like there's a potential move here. Equilibrium sits at the 200 EMA, that's $60,000. So if we do see a major move happening, which we can see within the histogram of the MACD getting weaker, as in there's not a lot of buying or selling going on, as the price comes down, the selling kind of fizzles out, and as the price pushes up, the buying fizzles out. This is a critical moment for a big decision. Whichever way this goes, it's going to be a pretty violent move in my opinion. Today, taking a look at the data, in my opinion, from various different indicators, I suggest that we are in a bearish pattern from a smart money concepts point of view. You can see the structure is bearish here. This was something that was indicated on the 5th of July. That hasn't broken. There's some smaller bullish stuff going on the smaller timeframes, but not on the larger timeframes. Elliott wave theory suggests that actually we are in the kind of final moves of a Y wave high, indicating that we are going to be looking for rejection. That rejection is coming in line with the downward trend line from the previous wick highs that we've had. And of course, equilibrium sits a little bit lower along with those volume profiles on the VPVRs. So in my opinion, it's a bearish time for Bitcoin in the coming weeks, but there's some positivity because we do of course have, and we do have to acknowledge, the US election happening in November. That is going to be a key moment for Bitcoin, for the crypto market, and we are going to see, in my opinion, a bit of green in the market. I don't think it's necessarily going to be long-lived. I do think we normally do see a little bit of downward pressure afterwards, so big positive move initially, bit of downward pressure, profits being taken, and then we get into the main event in 2025. You can let me know what your thoughts are on all of this in the comments down below, or join us in our free Discord server. I would love to get your thoughts and opinions as to where you think Bitcoin is going. If you found this video helpful, don't forget to smash that like button. If you are new here, subscribe and ring that notification bell so you never miss another update. And guys, if you haven't done so already, check this video out right here. It's not one that you're going to want to miss.